Are you up for a challenge?
I am always.
You said to me that nickel price would be moved sideways, right? What happened this week?
It ripped, 3%, hit the $6 level, priced up another 5 cents today. I'm not sure whether the fundamentals are strong enough to support it holding this level. I think we'll trade back down and we'll be range bound here for a little bit because the momentum will burn out on its own.
Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up. It is appreciated. It also helps us to understand which videos we should be spending our time, effort, and money on. And if you could leave your comments below, it helps us understand the sorts of questions you think we should be asking, how you think we're doing, and of course what you thought of the interviewee. You can also catch this as a podcast, an article, and a transcription on cruxinvestor.com. And of course, for our Crux Club members, you get early access to this video. If you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And if you want to see more videos like this, click the notification bell. We caught up earlier with Mark Selby, nickel market commentator, also CEO of Canada Nickel Corporation, TSX-V listed nickel company in Canada. This week, we talk about the price pop. Nickel's gone up $6. The market's hotting up following on last week's acquisition talk, it seems. We kind of get into the weeds here about the uses of nickel. People are excited about the battery market, the EV thematic, but the truth is currently 2/3 of nickel is used in stainless steel. So we get into that and talk about some of the numbers. Take a look in the description below at some of the other topics discussed. Anything interests you in particular, click on the number beside the topic. That's a timestamp. Now I'll jump you to that part of the video. Otherwise, enjoy what Mark has to say. Mark Selby, how are you doing?
I'm excellent, Matthew. Good to see you again.
Well, I'd love to see you for our weekly nickel catch-up, a roundup about what is happening in the world, and I need to pick you up on something.
Okay.
You ready? I'm ready. You said to me that nickel price would be moved sideways, right? What happened this week?
I did.
What happened?
Yeah, no, this might be my my career as a nickel commentator might be cut extremely short. So yeah, no, it ripped 3%, hit the $6 level, which is a very crucial sort of resistance support level for nickel. So again, the fundamentals not pointing to it at all. But the thing I'd sort of remind people there's three reasons commodity prices move. There's fundamentals, which people always focus on. There's the technicals, and then there's momentum. So you have other asset classes that are moving, and the commodities get sucked up with it. So, what I didn't predict, and if I did, I would be retired. Is the Shanghai index moved 15% in 1 week last week,
wow.
And so you had a surge of money come into commodity classes. So copper popped, nickel popped, and you've got to add a bunch of other commodity classes popping. The key thing there is. In 2008, I literally right after the GFC, I toured around, met everybody I knew in China to try and figure out, okay, what did that GFC mean for China? And so, a good fortune of one company I had a relationship with, their billionaire backer, basically got to meet with him and a bunch of his company owners. And I asked him, I said, what is the single best indicator to you in terms of turning points in the Chinese economy? And he said, surprisingly, actually the Shanghai Composite Index. And his reasoning was, again, the Chinese market is very liquidity driven. So when the government sort of pumps money into the system, you're looking for sort of a concrete confirmation that it's actually reached the business face. And so one of the ways that it does that is that money comes in, high net worth people, business owners say, I got more money, and they start buying stocks. And so, the stock market, in terms of a pop up, and pop downs, it's a good turning point indicator. So, the fact that the Shanghai index is ripping, at the same time that I talked about some of the other indicators, 7 or 8 weeks ago, just is another confirmation that we really are seeing a sort of a commodity led reflation here.
Anything else? What else is going on? Why is this price popping?
What else is?
Yeah.
No, I think in terms of the price pop, it really is momentum, and the fact that the fundamentals there was nothing negative. The key thing here going forward is the $6 is a pretty big support resistance level. This price is up another 5 cents today. I'm not sure whether the fundamentals are strong enough to support it holding this level. I think we'll trade back down and we'll be range bound here for a little bit. So, the key thing that I'll be watching for is to see things like, discounts for nickel pig iron, discounts for nickel sulfate, do those narrow or those widen? So what was interesting, as the nickel prices moved, you haven't seen the other prices of those other commodities move up with it. The discounts have widened out. So unless we see those things narrow over the next week or two, then we'll probably see prices come back down again, 10, 15 cents. So
Okay.
Again, the risk here is all upside. I don't think there's much downside risk here because inventories are all heading in the right direction or staying flat. Again, unless we see that fundamental confirmation of this momentum move, then it'll reverse itself.
Do you mind if we break that down a bit again for for newbies,
Sure.
people new to this? Okay, you talk about fundamentals, technicals, momentum. So let's try and understand what fundamentals includes, and then do the same for the technicals and the momentum component.
Okay, so fundamentals, are a lot about stuff that I talked about in some of the, the prior things. So looking at, premiums, for spot delivery of products versus sort of the exchange price. And then, prices of other products relative to, sort of the LME traded price, prices of scrap relative to the price. So those are all sort of fundamental factors. And then as well, things like inventory. So, inventories at various points in the supply chain, are they going up or down, at a point in time? Those are all sort of fundamental, sets of data there, and that I would be looking at. So again, last week when I said things are going to be flat, I was looking at those fundamental indicators, and there wasn't anything that says, the price is going to pop next week.
Right. Okay. And what about? So let's get into technicals then. So in terms of what do you look at, or what do you look for?
Sure.
There?
Yeah. No, technicals, particularly in commodities and in a bunch of asset classes. Again, if you're going to be committing serious money into this space, a material portion of your investing, you need to understand the technicals. And again, these are things like the prices moving relative to moving averages. There's things like relative strength indexes in terms of how strong, how far prices can move up or down before they sort of burn out in terms of that price move. Because again, some of these lines, when you have like 50 days crossing 200 days, or a price moving through a 50-day and a 200-day, it's amazing how much money just simply follows the technicals. You could have a horrible day fundamentally, some bad news comes out, but if the price for whatever reason breaks those moving average, the magic lines that I call them, prices move, up or down. So, again, you'd hate to buy something, a day before on fundamental basis, just before one of these key technical points, and then your trade gets wiped out by by a technical move that you had no idea was coming. So,
right, momentum.
Yeah, that's the trickiest part, because that kind of that is money coming at you from a different sector for different reasons. So again, you need to realize commodities are a class. And as much as we talk about aluminum and copper and nickel and uranium and so forth, there are big hedge funds that are, pulling levers on billions of dollars that go, okay, we're going to reweight $400 million or 0.5% of our portfolio, because we like what's happening on some numbers that we're seeing. We're going to move $500 million into commodities, and they go buy a bunch of commodity index funds that happen to own a little bit of each of these metals. And then, a bunch of buying shows up in those metals, and, depending on what's going on in those metals, they'll pop a certain amount or they'll go down a certain amount, based on that money arriving. So, those are always the trickiest kind of moves. And again, the key thing is if you understand the fundamentals and the technicals, then you can isolate those times when it's, purely a momentum move, and you need those other two things to show up to confirm, because the momentum will burn out on its own. If the fundamentals don't support a move higher or lower, then the price is going to come back down to where the the fundamentals are there to support it over the long term.
So it sounds like on momentum, you've kind of got short-term momentum, or immediate momentum, and you've kind of got a longer-term thematic momentum, which can affect the market as well. Okay, so I just wanted to kind of just talk about those things, just so people can understand that.
Yeah, no. One way to think about it is the way I have explained it is that basically prices will tend to stay in technical ranges, unless a fundamental event occurs. So that's sometimes why do prices stay in a range for a while? I mean, it really is a lot of these. You can do it on a chart and you can see, okay, it's trading in this channel or that channel And unless, so you think of laws of physics, that's, a price will remain in a technical range unless a fundamental event occurs or a momentum event occurs to pop it back out again. So that's kind of the way I've always sort of thought about commodity prices.
Right. And I think the current uranium market would agree with you. Right. Let us talk about nickel, though. Let's come back to nickel, the commodity, okay? Because we've had lots of questions being sent in to us after last week's session and the week before, and just trying to understand. It's easy to kind of forget that people are starting from different points of understanding here. So. And people, a lot of questions about the battery thematic and nickel's use in that, and the what the battery designs will be as you'd expect. But one of the questions came in, which was quite interesting. It was like, what else is nickel used for? Which I thought was a good one. You kind of forget, right? So we're going to talk today about stainless steel.
Yes, a very exciting product, and basically where 2/3 of nickel is consumed today. So again, it's important to remember, EVs are a massive part of the future, and EVs will probably be 30% of demand by 2030. But right now they're barely about 4% of current nickel demand. 65% or plus is stainless steel. Another 15 to 20% is alloys, is alloy steel and high nickel alloys, which are sort of variations of steel with varying amounts of nickel content in it. So in stainless steel, there's three main stainless steels. There's 300 series stainless steel, 400 series stainless steel, and 200 series stainless steel. So those are terms that you'll see talked about with stainless. What differentiates those categories is how much nickel is used in each one. So 300 is basically called austenitic stainless steel, and it has anywhere from 8% plus stainless steel. If you turn over a good piece of cutlery, you'll see an 18-8 stamped on it, or an 18-10 if it's even better stainless steel. And what that 18 and 10 are, 18 and 8 are, is the 18 is the amount of chrome. It's the chrome that starts to make things stainless, and then the 8 or the 10 is the amount of nickel that's in it, right? And the nickel helps it make it very stainless. So what happens is and stainless nickel also makes it workable and less brittle. It doesn't snap as easily. So 300 series and 400 series were the primary types. 400 series has no nickel in it. It's just chrome. They put a little more chrome in it to make it. One thing that's happened, so in the early 2000s, when stainless steel appliances became the fashion, they used to use all 18-8 stainless steel, so good high grades stainless steel. But as nickel prices ran, what happened is in the mid-2000s, people started using these 200 series stainless steels, which were invented in the 1950s and 60s when the Korean War and Vietnam War was on and nickel prices were high and nickel was tight. Some American companies came up with these lower nickel content stainless steels called 200 series. They're kind of in between. And so what happened was a bunch of appliance people started moving from 300 series down to 200 series and then to 400 series stainless steel. So there's no nickel in it. So the unfortunate part for stainless, people think it's stainless, but what happens when there's no nickel in it, and if you use a household bleach cleaner solution, anything with a little bit of bleach in it, over time that will actually corrode the thing. So if you Google around, you'll see people, so why is my stainless steel rusting? It's because they didn't buy stainless steel, with the amount of nickel in it. Now, fridges are one thing. What happened in the mid 2000s is in the developing world, the way you could tell the good stainless with the nickel in it from the bad stainless, the 400 series, is people would use a magnet. And so the 400 series was magnetic, the 300 series wasn't magnetic. Well, this 200 series stuff in between was also not magnetic. So some less than scrupulous manufacturers in certain countries would continue to sell 200 series material, passing it off as 300 series. So again, a fridge is one thing. If it's a pump in a chemical factory that then fails and corrodes because it doesn't have enough nickel in it, which actually did happen in China. So that actually sort of stop the use of more 200 series stainless steels in a number of applications. So so that's it. Basically, it comes down to sort of how much nickel is used. And 304 series stainless steel is the 18-8. That's kind of the bread and butter of nickel and stainless steel.
Interesting. I feel I've just gone back to school and learned something. I like that.
Metallurgy class 104.
Thank you very much. Thank you very much. Let's talk about Tsingshan for a moment, and NPI. And how do you think that's affected the market?
No, one of the massive benefits, and again, this is the Tsingshan guys again are good at sort of really thinking through the long term. Their fundamental premise was we want stainless steel to grow, be as wide, used as widely as possible. And so the way you do it is to make the product as cheap as possible. So the way to do that, again, is to sort of, find ways to strip costs out. So they've continued, their sort of surgent, massive growth in the industry has really driven down stainless steel costs, pretty significantly. And what that's done is allowed stainless steel to be used in more, many more applications. So, why does stainless steel grow at 5 or 6% a year, and why does nickel grow at 4 or 5% a year? It's because, over time, stainless steel has continued to evolve from a very niche product to a more mainstream product, where you've got the scale benefits that you can take advantage of, to lower the cost. And again, the reason I, argue, that so many analyst demand forecasts are too low is, despite this massive growth for a very long period of time, stainless steel is still just 3% of the carbon steel market. So there's so many more applications that, if it was the right price, then it would be used. So, that's why I think stainless steel is going to continue to gain share over the coming years.
Okay, so Mark, give me a sense of the numbers at the moment. I mean, are there regular numbers and regular updates that come out? Yeah,
so within the stainless steel market, so in nickel specifically, there's the International Nickel Study Group, and there's one for each of the major base metals. For stainless steel, there's the ISSF, which is the world organization that compiles stainless steel numbers. Unfortunately, there's quite a lag to these numbers come out, but when they do come out, they're sort of quoted as the official stainless steel numbers globally. So the ISSF, which is worldstainless.org website, published their first quarter numbers, and they break it down by region and across a few broad categories. It was down 8%, year over year in the first quarter, which is not to be unexpected. Second quarter will probably be even worse. China really hadn't recovered yet, and we hadn't really shut down in a major way the rest of the West yet. But I think what's encouraging is and it's surprising to me. Again, given the other fundamental numbers we're looking at, it wasn't really pointing to any big push in stainless production in China. But stainless reported 300 series. Again, that's the kind that's got the nickel, lots of nickel in it. That was up 11% year over year, right? So and China itself is more than half of the market. So that is, starts to create some significant momentum going forward. So as long as we don't stop, I think we've had the worst of what's going to happen in the West. So we're going to be building up from a base here. And again, this Chinese growth, continues to be strong. Again, you see a bunch of other macro broad indicators that say, China is building fixed asset infrastructure. The Baltic Dry Index, which is related to a bunch of bulk commodities, that's as high as it's been since September 2019. So, so again, I think if you want to track stainless numbers, ISSF would be definitely one place to go. And based on what's showing up in June, again, it looks like we might be on our way back up again here.
Okay, but they're running slightly behind the curve, and the numbers come out sort of after the event, as it were. Right. Okay, but it's still worth noting. So I think that was quite a good rundown of why nickel is important in stainless steel, and to be able to understand the stainless steel market and where it's going is important if you think you're investing in nickel. And two-thirds of nickel used in stainless steel is significant. But the magic comes when people think about the future being these electric vehicles. So we got to talk about the electric vehicle market. So some of the numbers coming out look okay. They're not what people expected.
Yeah, no, I think with EVs, the Chinese numbers tend to get a lot of the headlines. But what was very encouraging is the last month's reported numbers for Europe were up 80%, not month over month or quarter over quarter, 80% year over year. And then in terms of the entire first half, you're looking at over 50% growth year over year. So, and Europe is already, a significant portion of the EV market, so China is still struggling with the pullback in the subsidies that they had placed in terms of getting some momentum back in EV sales. But China has a stated goal of 25% of vehicle sales to be electric by 2025. When the Chinese state a goal publicly and put it up in bright lights more than once, they will deliver on that target. So, so again, don't get too caught up with, okay, Chinese sales this month, aren't necessarily, where they are. They will be selling 8 million electric vehicles, a minimum of those by, 2025. And then when you get to the rest of the world, again, I think we talked about this, last week was, the governments, as part of COVID, want to reshape their economy, right? Let's take this opportunity, this crisis, to reshape the economy the way we want it to sort of evolve in the future. And sort of the whole electric vehicle platform is a big part of that. So, I think these numbers, again, really reinforce that shift, is really, really happening. There's another sort of good, one-off data point that, Volkswagen, one of their sort of longest running car factories, is now going to be producing 100% electric vehicles. They produced their last internal combustion engine at sort of one of their historic auto manufacturing plants. So I think, again, we're going to start to see more and more of those types of milestones happen as we move forward here.
So this is all good news for nickel. The subsidies are coming back into Europe. I think the Chinese have reinstigated their subsidies for automotive or electric vehicle cars. What are we able to glean from this? Let's move, in fact, segue over to mining companies, nickel mining companies, right?
Yep.
We've heard a couple of acquisitions last week, some big acquisitions you talked about last week. The market's hotting up somewhat. Where's the next big nickel deal coming from?
No, I mean that's the. The reality is there's not a lot of nickel assets available. You've got a handful of Western Australian companies, producers like Western areas. You've got Nickel Mines in Australia that owns a chunk of the Tsingshan operation in Indonesia. And then you've got Sherritt in Canada as a standalone producer. But there's not necessarily a lot of companies that are there. So I think that scarcity value, should start to make things interesting. Again, I think, we'll need to see more momentum in nickel prices to see sort of the herd start to come. But again, you always want to be in front of the herd. That's when you make, lots of money. So, but, I think the signs are there. We talked, the previous week that the two of the large low-grade sulfide assets in Australia are both gone. So literally all of the good large low-grade sulfide assets are now gone from Australia. So with what we have in Canada nickel, I think the relative value of that just ticked up a notch. And I think again, another sense of where where the smart money is going. There's a startup called Cobalt. It's a massive private equity. They highlight the fact that Jeff Bezos and Bill Gates, a fund that they are invested in, has invested in them, and their whole thing is they're out looking for cobalt and battery metals globally, and they've got all these high tech Silicon Valley data scientists crunching places to go find more cobalt, and they came to Canada. They basically picked up a large property in northern Quebec, adjacent to I'm chair of Orford, and they picked up a bunch of property, we around kind of where we are. We think we've got the best bits that aren't owned by Glencore, and the Canadian Royalties Nunavik mine that's up there. But again, that's where they're having to go to find what they think is high potential, assets, and I think that's their first project acquisition. And again, I encourage people to go to that website. They've got a lot of people, so they've obviously raised a lot of money, and they've obviously tipped into the Silicon Valley VC market, and so it'll be interesting to see sort of where what parts of the world and how they look to go forward.
Well, the interesting bit for me is because when I've seen this before in other sectors, other verticals, where you kind of get a lot of money. And it doesn't necessarily convert into value because they don't actually understand what they're doing. The money covers up papers up a lot of cracks, as we say here in the UK. We should go and have a look at that and sort of see what that's about. But interesting times. It suggests an intent and suggests the fact there's a lot of conversation going on with, people are looking at the macro story here and they're buying into the battery thematic for sure. So what's your call on nickel going forward? Just so I can pick you up on it next week. You think it's gonna reset back down again for a bit?
Yeah, I'm not sure. I mean, we may pop another 5 or 10 cents higher from here, but until those fundamentals confirm the momentum move, I would love to say that nickel prices are going to hang in above $6. But I think we're going to trade the $5.80 to $6 a pound range here for another few months. But again, we're seeing the recovery in stainless. We're seeing, sort of the sales growth in EVs in a number of markets. So again, I think the medium and long-term, story remains intact, and we're going to continue to move higher from here. What we need to resolve over the next 6 months is a little triangle of, NPI growth from Indonesia as those plants ramp up versus ore supply from the Philippines to China, which will starve, will they starve, NPI production in China, which will be more than offset the NPI growth from Indonesia, and then sort of how strong the recovery in nickel and stainless demand is going to be from China. And so far, that's looking very strong. So it'll be a question of how those other two aspects play out. So I'm going to try, over the next few sessions here to start to provide some data regularly to be able to help, people sort of keep track of where we are on that little triangle, which I think is going to be the key determinant over the 6 months until the EV story completely overwhelms what's going on in the market in a positive way. It'll be that little triangle that decides where nickel prices go in the next 6 to 12 months.
Okay. Are you up for a challenge?
I am always.
You are always. Okay, well, next week when you're on, and we've started gathering these questions, you're going to be asked questions by the Crux Investor Club members and some of our subscribers. Okay, so I've kind of got a day off, which is great news. All I got to do is read these out to you. So if you're up for that, so lots of questions have been sent in. I think people are getting interested in nickel. They're understanding that nickel is picking up momentum, and perhaps now's the time to start picking a few horses in the race. So that is what's happening next week then, Mark. You've accepted the challenge. Okay,
no, that's great. And again, encourage people. The best questions are the ones where people call you, you say you're full of BS and I don't believe anything you're saying or you're totally wrong on this. It's that debate, that really gets things going. And I'll remind people 6 weeks ago when we talked about, turning points in mid-May, and I said, it really felt like, copper and nickel prices were starting to turn. Copper and nickel prices have gone up 10 to 15%, and they've had a nice, significant move up there. But the high leverage, the high torque stocks that benefit when you get that first step up in prices, companies like Capstone, Taseko, those stocks are up 40 to 50% in 6 weeks.
Wow.
That's why, part of the reason I was so keen to talk about those turning points are, those are, you get them once or twice a cycle. And so, they're just great opportunities to make some real, some great return.
Fantastic. Well, Mark, thank you again for this week. That's lovely. Like I said, I felt like I went back to school there and learned a thing or two. I'm going to have to look at my cutlery completely differently now.
Exactly.
And we'll catch you next week. Get those questions in front of you, and hopefully we have a really good session. Appreciate it.
Excellent. That sounds great. No, thanks, Matthew.